Welcome to the show. Listen, this morning we traded in the Stocks with Josh Discord, the pro trading community. We had a live session. I mentioned it in yesterday's video. I said, don't miss out. We're going to live trade tomorrow. We had a beautiful 90% win on Google. So I just want to lead this video off and I'm going to say it again. Guess what? On Friday, I'm going to live trade again. I don't want you to miss it. Now, I'm going to leave the link for the Stocks with Josh Discord in the top pinned comment and the description of the video. I want you to come and check it out. The people in there making money, thousands of dollars, thousands of people, one after the other, minimum 20%, 30%, 50%. One woman in there made $24,000 today. And, you know, we took our time. We took our time getting into that trade very patiently. Could have got caught up on a lot of different moves, but we didn't. You know, a little bit of experience. By the grace of God, we made some money. Don't miss the Friday live trade session. Now, today I have a special guest. This woman has coined the phrase skips that you hear me talk about all the time. And she has a professional trading system that is underneath that skips term for trading options. These are the mid-term options. And you've probably heard of leaps, which are options which are typically dated for the following year or 12 months. This is a different approach of approaching midterm options, and I'm going to let her shed some light on that. I have a video here today planned, and I've already got too much that I want to talk about because the markets gave us a flush down, a flash sale. Now, I talked with you guys in the last couple of videos, and I mentioned that the up move would remain intact on the SPY as long as we could hold above 588. Well, we literally, like a freight train, crashed through that 588 and the markets pulled back pretty hard. It was an interesting day. A lot of things were doing very well. Bitcoin knocking back on all-time high. And, you know, you kind of have to expect it not to try to get up over there this same day. It's not shocking that we've had a pullback. But we no longer are in a safe uptrend. We've had the first major crack in this up move. Now, I'm going to remain optimistically bullish and cautiously bullish. I'm going to see this as an opportunity to get back into some big tech plays. I told you that I myself was wanting to see this pullback. We're going to pick Ashley's mind today because she's all about those skips and leaps. That's her bread and butter. So I want to get an idea from her as to what she might have bought today and what her most optimistic positions are. I consider it a real privilege when we have her on the show. Let me just pause before I get in. I got so much to cover, but Ashley, thank you for being here today. What did you think of the market volatility?
Well, Josh, the way I make my money and my community makes our money is on volatility. So we actually welcome it and we sell options quite often. Now, we do complement our trading strategy with skips and leaps, and I'll go through that in a minute. But when we see volatility, it's great for us because when everyone panics is when we step in and we actually sell options to protect their portfolio. And then we get to keep all that premium. And if we get dangerously close to our strike price, then we roll it out further and we enjoy all the lucrative money that comes from insuring portfolios along the way.
Every thing that you said was dripping with powerful knowledge and information, but I know that some of the people are watching are brand new and they don't know anything. And you talking about rolling stuff over, is that something, it's like a somersault you do to relieve the stress? Could you define rolling things over a little bit?
Absolutely. Well, let me kind of go to the basics first so that we can build upon that. When you are an option seller, when you sell put options, you're basically, the way I like to think of it is you're putting up your cash to buy a stock at a price you're comfortable buying it at. Now, usually I'll select where we're at the maybe at the bottom of a technical analysis term, the Bollinger Band, or I'll select a moving average that we're sitting on, or I'll look at some candles to see where there's support in the past, and that's the price I select. And I'll say, if this stock, let's take Tesla for example, if it gets down to a certain level, I will ensure you that I will buy that stock from you. Well, people pay me money to do that to ensure their portfolio. And I mean, I'm putting up my money, I'm taking on a bit of a risk to do it. And so if we get close to the strike price and I see that there could be potential lower action, then I buy back what I had sold once before. I buy back the option. Then I sell a new one that is more expensive than the one I just bought back. And I usually push it out in time. And then I get more money that way. And then I go down to a safer strike. So there's so many options that you can do with options to rehabilitate a trade that's gone against you.
You know, I think that there's a lot of folks that would love to begin on that journey, but just options alone are intimidating. They don't understand the Greeks and they don't understand what happens or what to expect when they get into it. So I brought Ashley on so that we could have these conversations. But I want to get into some meat of what happened in the market today. And we're going to keep bouncing things off of Ashley and getting her reaction. I also have some contrarian stock picks for you guys today. But let's talk a little bit about why the market reacted and did what it did. Basically, the 20-year bond sale failed. This is now a return to concern about our debt. The Moody downgrade indicated that we had a debt problem. And what the United States does is to basically fund our habitual spending. They go out and they sell bonds to raise money, right? And then they tell you, you hold those bonds, we'll give you interest for holding them. And someday in the future, 5, 10, 15, 20 years from now, 30 years from now, you can cash them out and they'll be fully mature. And so to keep this pyramid system running, we've got to continuously sell bonds to continuously raise capital. And as I said to you, we needed the Fed to lower rates so that they can refinance the existing debt, because we've got between $5 to $9 trillion worth of debt coming due between July and September. And if we have to finance it at the current Fed funds rate, if we have to finance those at this current rate, the government's going to end up spending too much. And we're going to go from paying, just in 2023, we were only paying I think it was $600 billion in interest. And then that jumped up in 2024 to around $900 to $1 trillion in interest. And right now we're looking at, I believe, around 1.4. And I don't quote me on these numbers. They're good enough for me to make my point. And there's the concern that if we do not refinance this debt, we will be looking at spending $2 trillion on our United States federal government credit cards. Now, then you're going to have to sell a lot of bonds. But what happened today on the 20-year, nobody showed up to buy them. Now, people did come and buy. It wasn't a complete failure, but they didn't buy everything that was made available. And the market shows health and strength when the Fed comes up and says, I'm going to sell you $100 billion worth of bonds, and there are buyers waiting who want to take on our debt, and so they happily buy it. Well, some folks came in and bought it, and again, these are not specific numbers, but let's just say that only half the buyers showed up, and they didn't buy everything we were offering, so it was a failed auction, and it reasonably sent the market in a panic. Now, I've talked about this, and I'm going to get Ashley's reaction here in a minute, but I have been saying that we do have underlying problems. Not only does the federal government have a problem with their credit worthiness, but individual consumers are also struggling with credit card debt, and we are seeing those numbers hit default levels never seen before. And so the market loves to rally. We've been rallying. We have undercurrent problems. Now, that's a lot for me and for all of you guys to digest, but let's throw it on Ashley. Ashley, when should we be buying some skip puts and some leap puts? How concerned are you about that bond auction today that didn't go well?
Well, I have an answer for you, but first, I like to use fun analogies to help our audiences grasp kind of what happened. So while you were talking, I thought of one that may kind of help them understand the concept. So let's assume that you are in your household and you're talking to your spouse and you're like, we really need a little bit of extra money. The air conditioner went out and we need some money for it. And you say, okay, I have been holding on to a lot of stuff in the garage, and we're going to host a garage sale and sell all of our stuff. I've been to garage sales before. I know what we can get for XYZ that we have. And so we post everything. We have our garage sale advertised. We're super excited. We open the garage doors only to find that there's only one or two people there, when typically there has been people lined up down the street to buy all my junk. Now nobody wants it. And so I have to go hurriedly and take the pricing down on everything because not enough people wanted it. And when they see that not enough people want it, they are definitely wanting a better deal than what I thought I could get. And so that's the equivalent. That's my fun analogy to kind of see what happened. And it's all, I think, because of the downgrade that Moody's gave with our credit rating and such. But, I look at these, I mean, me and you have been in the market for years, and we have seen dynamics like this. One thing I will say, it always gets worked out in the end. The market finds a way to survive and thrive. And so if you look at it as an opportunity to get a great deal, let's tie it into what we're talking about, skips and leaps right now. So this is a real live example of something that happened. When we got to the point, and I love trading the Qs because they're the NASDAQ stocks, they're the high-tech stocks that gives lots of premiums if you're selling options, but I also love leaps and skips using the Qs. So when we had initially come down to that 200-day moving average the first time, I thought, ooh, this is perfect. We are on a strong level of support. I'm loading up. So I actually made videos about it. I bought some leaps on the some skips. I bought some leaps on the Qs is what I did, and also some skips. Well, when it started pulling down further below that 200-day, I thought, uh-oh, we've got a little bit more downward pressure than I was expecting. But luckily, and you preach this a lot too, Josh, I had stop losses on my leaps and my skips. So what happened was it kicked me out. Now, I took a loss. I did take a loss, but I preserved so much capital. I was able to redeploy that when we took additional legs down. So today, I am sitting on leaps for the Qs, and they are up 100%. I bought them on April the 7th at the
Nice.
$400 strike. But it's because I preserved the money that I had put out there just in case I was wrong and I wouldn't lose a lot. So I always say it's okay to be a little wrong. You just don't want to be a lot of wrong because you have to preserve your capital for a better deal down the road.
Well, I want to throw a common problem by you. I always have a lot of empathy for people that are new to this or are relatively new on their journey. And this is what happens. And I try to challenge my community is they put that stop loss in. They take a risk position, which is scary. They put that stop loss in, then they get kicked out, and then they're afraid. So it drops some more, and they have to have the discipline to get back in, but they're afraid, and so they decide that they'll wait for it to stop dropping and only begin to go back up, and then they typically miss the bottom. When I try to encourage everybody that you've got to take the risk when things are oversold, they're beneath the 200-day moving average. Big tech went on its own personal recession, being down 36%, and these companies who are implementing AI and are going to be totally revolutionary in the next 2 years and impacting the global market because they're spending money on AI that the rest of the world can't. They don't have the money. They don't have the cash. Some of you guys forget that Apple Corporation is bigger than the entire GDP of a number of European countries. So they have the capital and the power to deploy. Now, that's a whole other conversation because we've got to talk about the fact that Apple isn't spending money on AI, and that's why the stock is getting punished. But let's take Microsoft, for example, that's planning on spending another 80 to 100 billion. Countries aren't even able to do this. The EU is collectively talking about putting money together, but you know how politicians, they're addicted to spending, and that money goes everywhere, but in the infrastructure, we still have the potholes, and a lot of the world is still going to have a gap in their need to develop AI, but we've got big tech companies that are doing it, and so back to my point, there's a little rant there for you, but the fact is, it was worth buying them when they were 35% down, but I know, Ashley, I know how people become fearful, especially if you get kicked out. And so it takes a lot of discipline to keep working that trade plan and just being happy that they were able to cash up and get it 2 or 3% lower. What are your thoughts on that?
Well, I do have an answer for that. And here's how I want you to think about it. Okay, so everybody that's watching, you are the CEO of your trading business. Okay,
I
you're
love it.
you're the person. Let's assume that you had a different business. Let's assume that you had a business selling cakes. Well, you would have overhead, and part of your business plan would include baking some cakes that maybe you burnt and you had to toss them out. You would plan for maybe some of the icing that you purchased going bad and you're not able to use it. And that's part of doing business, and you have just an expense associated with jumping into a business. Well, when you're trading and that's your business, part of the expense is having to be kicked out of a play and lose a little bit of money. But if you continue to go back at it and you know that that's part of your expense, you just keep going at it until you see that there is a reversal and the stop loss doesn't kick out. Now, you can be too tight on your stop losses and then you're not having any luck. So we'd love to talk about skips. Let's talk about skips. If you are purchasing a skip and we're in this volatile market, I like to put on it about a 25% stop loss. So that means, let's assume I spend $1,000 for my skip. Well, then I will go ahead and put the reverse stop order in for 750. So if something I spent 1,000 on whittles down to 750, then I'm like, I'm out. Okay, I'm out. And then I look at the technicals, I try to determine where's my next entry, and we go at it again. Eventually, it's going to stick. Eventually, the cake's going to come out beautifully and perfect, and I'm going to get top dollar for my cake. And I'm so glad at that point that I kept at it and I didn't just shut down my business because I burnt a few cakes. So, eventually, especially with the market, because it consistently goes up over time, you just have to bake that into the equation. Now, where you get into trouble and where, our viewers get into trouble is if they don't put that on there, and then not only does the cake burn, but it catches fire and it burns down the entire business.
Yeah. No, I love it. Great analogies. I love the perspective. I'm going to take a quick moment to ask everybody to smash that like if you've liked this conversation so far. I'm going to be giving you hot plays. They're hot to me, okay? They're on fire on my watch list, and one of them I'm going to buy some tomorrow morning. So I'm going to try to go through that. But we've got a lot to cover, but I've got to hit a comment here from Arnold Leffel. Now, I said to the Discord today, we've got thousands of people in my live trade session. And I said to them, they're going to be so frustrated. There's a couple guys out there, they're going to hate to hear that I made thousands of dollars today. They're just not going to like it because I always come out here and tell you that we're winning. And sure enough, Arnold says, how the HELL does he always make money, yet he is bullish and says the market is going up? Well, in regards to the bullish comment, I've been saying a month ago, our concern was position size, and you heard me talk about it all the time. Every video was position size, position size, position size. And then this week, I've begun to say, we're cautiously bullish. We're still climbing. The market's not showing any divergence. Now we need to remember that everything should have a stop loss. Everything should have a stop loss. In the Stocks with Josh Discord, I gave you guys a stop loss for every big tech company, and I gave you a pivot one, and we hit the pivot ones, and we've hit the stop losses. If you guys put both of those into place, you've secured your money. So I knew that we would get somebody complaining that I made money. I'm going to make a little point here. I took a trade right before the market, right before I started this video. I don't know if you guys can see it, but I'm up here $700 just in the, I guess the 20 minutes that we've been talking. Stop loss is set. Take profit is set. I have a trade plan, and that's why I'm making money. And if I get stopped out of something, that's not a problem for me. I've been doing this long enough. I love her analogy that you're going to burn some cakes. You have to plan. You're going to be getting your frosting, and you're going to be trying to it's going to squirt out the other way, and you're going to make a mess. You're going to lose time. Problems are going to arise, but we've planned for them. That's why we put our stop loss in. That's why we use controlled position size. Now, I wanted to briefly go on and cover a few more things. I want to talk about the other thing that impacted the market. It wasn't a major reason why the market failed today, but it was setting up for sort of some anxiousness, and that was Target's earnings. The market did not like their earnings, did not like their forward guidance. They had an adjusted earnings per share of $1.30. This reflected a 36% decline from the Q1 of 2024. Now, I wanted everybody to process that. I'm going to get Ashley's response. So Target's reported earnings. They're one of the largest retailers in America, and they've done 36% drop in their earnings per share in the same time as the beginning of 2024. That is not a joke. It's reflecting that there's been a huge step back from buying at Target from consumers. And the consensus estimate that Wall Street gave them, because Wall Street already expected that they weren't going to do as well. They were expecting it to come in at $1.62. It came in at $1.30, a huge failure. And in addition to that, they also gave weak forward guidance. You guys, so they're basically saying it's bad now. It's going to get worse later on this year. Now, before the failed bond auction, we were sitting and digesting as the market was up towards the top. We're sitting and digesting the fact that we have a major American retailer telling us that things are slowing down way slower than people were expecting, and it's not going to get better. It's going to get worse. Again, this is sort of the story of a coming recession. And so I'm just going to shoot it over to you, Ashley. I know that none of us have a crystal ball except for Nancy Pelosi. But the question is, what is your expectation for this year? I've told everybody that the month of May would be good, that we would continue to chop higher roughly through the month of May and possibly even the first week in June. I believe this pullback is an early crack to the fact that we aren't just going to keep climbing and return all the way above 600 and keep moving higher. So I think the market told us today that there were some anxious sellers, and they didn't, and I've used this term, stealth selling, and it did not show up in the momentum indicators. Instead, they just hit the sell button and sold heavy bags today. They didn't stealth sell, they dumped on the market, and it caused a lot to just flash down. Now, it's my view that we're going to steadily recover, but I believe that we need to bookmark this incident and remember it because it's an early signal of the way that Wall Street's looking at the big picture. They see unresolved problems. What do you see, Ashley?
Well, Target today is interesting. You mentioned that. So some of my members were asking if we were going to play Target's earnings, and I just felt like it was too big of a risk. So I didn't, call a Target earnings play. But when it dropped afterwards, I started looking back on their price action, and I decided to sell a put to my earlier point down at the $85 mark all the way out till September. Because I said, and this is true if you think about this, it's a lot less risky to purchase Target at 85 a share than it would be even today, okay? Because it is higher today. So people don't think about that a lot, but if you're going to, let's say you don't do options and you just want to swing trade, it's less risky to purchase a large retail company like this unless they go bankrupt, which I don't think that's in the cards. But if you purchase it at when it's beat up, it's a lot less risky than purchasing it when everybody's talking about it. So this is when you start getting the deals that end up growing your portfolio over time. So with that being said, being
So
in
can I
corporate
understand this
America
correctly?
myself,
Can I just clarify with you? Did you sold puts today?
I did. I sold puts on Target saying I'd buy Target if it gets down to $85 a share.
Nice. So I already know that there's some folks that don't understand that. I just want this to be like, talk to me like you're a third grader,
Sure.
because first of all, there
Got
are
it.
people that don't even understand what the word put means. And for those who are super smart and advanced, just be patient with us because this is going to help some people. What do you mean when you say selling a put right now? And why would you do that because really it's going to enable you to buy that position. But would you explain that just a little bit more simple?
Absolutely. All right, so $85 a share. How much money would I need to purchase 100 shares of Target at 85 a share?
You would need 8,500.
Perfect. Okay, $8,500. What I did, I earmarked, or my broker did it for me, earmarked $8,500 in my portfolio because I sold a contract to some nervous investor, and I said the broker's going to hold my 8500 and I will actually buy your target shares at $85 a share if it gets down to 85 or goes lower by my expiration date, which I did September. Well, because I went further out in time, I was able to go really low to 85 and get a lot of money. I got paid, I think it was close to about $500 to actually take on that risk. And
And
then once, go
and can
ahead.
I assume, Ashley, that it would also be your view that in the time frame that you've allotted, they would likely or could expire, it could expire worthless, right? So you could
And
end up.
that's what happens most often. I keep the money they paid me to put my money aside, and then it never gets to my strike price or it gets there and it bounces. And then I buy the contract back with just a little bit of value left, or it expires worthless.
So you're
But
winning,
let's
you're winning no matter what, because you made the money on the premiums you collected when you sold it, and you bookmarked your position in which you would be willing to take risk. So they're really, it's not that it's without no risk, because you have to make a financial decision, but it's a great trade plan. Now, if you guys don't know who Ashley is, she has her own page. I'm going to let her introduce herself because I always say the name incorrectly. This is, go ahead, Ashley.
Thank you. I'm trading with Ashley, and I started my very own YouTube channel almost a year ago. So in July, I will be upon a year, and I'm close to about 40,000 subscribers now. And I have a bustling community that is with me every day. We're in the trenches together. I think there's about 1,500 of us, and we trade together every day, and we have a lot of fun. I have coaches and everything. So, what you would expect from a trading community, but it's really a lot of fun because we put all of our brains together and we strategize together. And then we have a variety of different trade setups that we take just from putting our collective minds together. We have strategy sessions and everything. So it's just a lot of fun. And it just like that makes us a lot of smart, very smart, a lot smarter. You know, if you're a trader, and most of our viewers are, if you're the only trader in your household, it gets a little lonely because nobody wants to hear about your great plays, or they don't understand what we're talking. They look at us like we have two heads and we start talking about puts and calls and stop losses. They're just like, this, what's for dinner? They don't care. And so it's fun to have a community on YouTube, and then our trading communities like Josh and I have. But yes, it's Trading with Ashley, and honored to have any of you come over and subscribe. I am so excited. My goal, Josh, you have to have goals, right? My friend Larry Jones taught me that you got to have goals. So my personal goal is to have 50,000 subscribers by my 1 year anniversary. So I imagine that a lot of our viewers can help me get there.
Guys, this is the truth. I never skip investing with Ashley. It's Trading with Ashley, but I always get the name wrong. I never skip a
Okay.
Trading with Ashley video when I come across it, because I just love what she shares. She's got great energy. I want to invite you guys to go over there and subscribe, and don't skip watching them. Even if the content you say, well, man, this is selling these options, I'm not even trading options. This is ultimately, as you're building towards your goal of really being emancipated and living off of your investments. This is one of the best ways. What she teaches is one of the very best ways of getting that income by selling your calls and puts. You take less risk when you do that if you have a game plan, or it can basically produce income off of your money sitting in your account. And this is ultimately where I would go if I stopped wanting to assume the risk of trading every day. I wonder if I could ever slow down and just sell options because I'm such a trader at heart. But at some point, I really should. I should do that. I wanted to show you guys this chart here. I want to show you Target real quick. because I want to make an extremely important point. Let's focus in on this. We're going to ignore the MACD for a moment. This thing was $266. Quite a while ago, I traded this breakdown of this triple top here. Now we've come much lower, but here's what I want to show you. We're on a monthly chart. Very rarely does it ever get oversold on the monthly. And sometimes when it gets down to being close to oversold on the monthly, it reverses and goes up. The last time it did that, let's look at this just for a perspective of her trade. So the last time it got oversold, it was $28, and it touched the oversold level on the RSI on the monthly chart. And then after being $27, in the course of about 2 years, it went up to $60. So it went up 100%. Well, let's see if this continues this way. Here, it never got oversold. It just got close to it around 33%. 30 is oversold. And after that, it went up from $52 to $266. So this went up like a 4x over the course of from 2017 to 2021. Yeah, about 4 years, this thing just rocketed up, doubling, doubling, and doubling. Well, guys, let's pay attention. Now, this was 33%. We're lower now than we were the last time it got oversold. And so I kind of agree with Ashley that this is contrarian. It's to invest in something that's beat down. But you have to ask yourself this question: is Target over? Is this thing just going bankrupt? Is Amazon? Is everything going to be bought with drones, robots? With Amazon, or are we going to need Target in the next 5 years? And if you think we're going to need Target in the next 5 years, we are very, very close to taking a reasonable risk plan on a very high time frame. The monthly chart, that's huge. Getting down here to this oversold state is appealing. Now, all of the stocks that I'm going to talk to you guys about, if I have time, are all contrarian plays that are mega beat up. And I really wanted to get Ashley's thoughts on them. But I have a feeling we're not going to have time. And so I want to begin to just prepare you for a couple things. One, I'm going to be going live in 2 hours with the Stock Squad on StockMo's page. And so if you want more of what I'm dishing out here today, catch me over there in the next couple hours. Okay, let's take a brief moment, if we can, unless you had something you wanted to discuss, Ashley.
Well, the one thing I wanted to share with your audience, and me and you are doing something pretty special together.
That's right.
And I thought we would share that we're going to collab on an actual workshop. And that term, skips, it's something that is very popular in both of our communities. And so Josh and I have decided to come together and do a workshop, host a workshop together. We're going to be doing this on the 31st, May the 31st on a Saturday. And we'll have all the details. We're going to drop some links for those that want to sign up. It won't be extremely expensive, but you're going to get the both of us because, Josh and I have worked together for a while now, and we have come to realize how we complement each other's trading styles. So Josh is the chart master. And when it comes to skips, it is a trading style that I came up with to complement the leaps that we're buying. And I'm going to take you through the best entries, how to set stop losses, why I even came up with the term, how it works with leaps to grow my wealth and to grow our community's wealth. And then Josh is going to teach you the entries and exits. So it's pretty exciting that we're coming together to train together, because I think everyone will get quite a bit out of it when they have the perspective you offer coupled with the way that I trade. So pretty excited.
I'm very excited about this collaboration. I was just checking to see if our guy had the link so that I could. You don't have the links, do you, Ashley?
Oh, no, I've been with you, and I know that they are working on them.
Okay, we're waiting on the links and the link for you to be able to sign up. This is going to be, I think, a really cool event, and it may be a one-of-a-kind event. I'm going to give you sort of my top indicator tools and how I watch for a reversal and how I take big risk positions. I've got something I've never shared, the way that I'm preparing it for this event. And Ashley's going to deep dive and teach on skips. We're going to unwind the mystery of skips and the technicals that support them. And so this is going to be an event. It's not this weekend. It's the following weekend, correct? It's the 31st, Ashley? And so if
it is the 31st.
I'm going to drop a little video and link on this for every video over the course of the next week or so. So you'll definitely be able to find it if it's not available here yet for this particular show. Thank you for bringing it up. I'm super excited for collaborating with Ashley. I want to talk about a couple things. I want to get a bunch of subjects in. So I want to mention this for those, and I really am going to talk more in depth about this during the Stock Squad video tonight. And if you guys recall, about a year ago to about a year and a half ago, I was dissing on Apple quite a bit. And it was largely because Warren Buffett was unwinding and selling his bag. And I said to you guys that there's never no reason for those types of large business decisions. Warren has gained some point of view that's causing him to unload his Apple position. Now, he still has a large Apple position, and I am not talking about this to panic everybody and cause them to sell their Apple position. But the fact is, Apple got hit with a bad news event today, and I want to discuss it because I find it wildly interesting. Now, if you have ever read any books on Steve Jobs, you know the character of Johnny Ives. This is the guy that gave us the look that is Apple. Okay, so everything he was so significant in creating the iPhone today, and has been a massive part of the leadership of Apple organization. Now, he left Apple about 6 years ago, and he started his own company, and they're partnering. They had a major investment on the part of ChatGPT, OpenAI, in this company by the tune of $6.4 billion. And here's what I want to mention to Ashley, and I want to talk to you guys about. Now, I harped on Apple being in trouble about a year ago because of Warren Buffett's lowering his position. And I kind of said two things. Here's the thing that I thought was happening, okay? I thought, you know what? He's concerned about the fact that Tim Cook is getting ready to step down. We've been hearing from Tim Cook over the last years, we'll say 3 to 5 years, he's been talking about unwinding his leadership role of Apple. And that would be a huge and major change and put Apple in a very vulnerable place. And so I believed that Warren Buffett was largely unwinding his position because he didn't want to be in a post Tim Cook Apple, right? But now we have even a bigger problem. One of the geniuses, the designers behind the Apple products from the days of Steve Jobs is saying, I know that phone backwards and forwards. I'm going to marry it together with the best AI technology in the world, and we're going to revolutionize this space. Nobody's been able to really threaten Apple for a long time. And we've seen the same thing happen with Google. And so the question I'm going to ask, and I'm going to dive into this later tonight and get the Stock Squad's reaction, is we've got some big tech companies that are their moat is absolutely legitimately being threatened right now. And this particular news story was amazing to me. And here's the problem that Apple has. These guys have a CapEx plan of $3 billion. They are not taking AI seriously. And I just want you guys to know personally, I'm going to give you guys my own personal experience. Every single time that I say the words, hey, Siri, I got to keep it down because all my Apple products will start acting up. Every time I say that and I ask it a question, it can't do it. It can't answer.
Yeah.
It never answers.
It hates my southern drawl. It hates it.
Yeah. It goes beepity. We got a new feature where the phone gets a full ring around the screen, but it still doesn't deliver any answers. And they're going to try to compete in this space as the largest company in the world. They've been losing that position here and there. NVIDIA took them over a number of times, but they're going to try to compete in that space with $3 billion spend when you've got companies like Microsoft spending $80 to $100 billion. It's not going to happen. So I am seriously concerned about the moat around Apple. Does that mean I'm going to unload? No, it means that I believe that there is the threat of it facing some more downside, and we're going to need to begin to look at that. But I'm just curious your thoughts on Apple and Google, Ashley.
All right. Have you ever heard of the term "don't be a dinosaur"? Have you ever heard that phrase?
Yes.
It just means if you're a dinosaur, you're going to go extinct. Well, the issue that I do have with Apple, which is why in my portfolio I only have very small exposure to it, is because my personal experience, like you, every time I have the feeling of FOMO to upgrade because I think it's going to be earth shattering, I'm disappointed. And I realize that the phones are not changing enough. Their computers aren't I mean, I have an incredible Apple computer. I paid quite a bit for it, but the speakers are awful. And the tech guy that helps me, he's like, yeah, that's just Apple. And I'm like, why haven't they figured out some of these basics? If they're supposed to be leading this industry, they are lagging behind when we're going around them to add components to our hardware because it's not giving us what we need. And so I've just been disappointed with their lack of innovation with AI. That's been, shockingly disappointing. And there was a lot of hype about it, and then it fell flat. So they keep every iteration that we get of the iPhone. To me, it's not anything that's earth shattering. So that concerns me as an investor, and I would not want too much exposure to something that I think is slowing down, and maybe it has seen it's the top. And now, if they a lot of times from being in corporate America, I know if things get too bad, then they shake things up quite a bit and then they auto correct. But is that going to happen with Apple? I don't know. We're not privy to those conversations. We don't know, how deep this goes in the organization and what they're willing to put financially behind it to turn the ship. Because at this point, with a company this large, I mean, it's going to take quite a bit to get it going in the right direction
Yeah,
again.
and don't forget their failed venture into a number of technologies like Apple. They did something with Apple TV, but it wasn't what people had hoped. And then they were going to get into the EV space when the EV space was wildly crowded, and it really made no sense. And by the time then eventually they announced that they were giving up on it, and that they had again they only spent $10 billion when they would have needed to have probably spent $500 billion. They've been toying around with development, and I just see a string of failures. And I think Tim Cook, he would love to leave on a high note. I just don't think he's going to be able to. I think that he probably should have coincided his resignation with Warren Buffett before Warren began to dump his shares, because I think he could have. That's the only way he could have gone down on a high note. But am I too bearish? Am I the crazy one? I am very concerned about Apple stock because it's been a bellwether play for. I made the biggest trade I ever made when I first started trading, and I thought, and it's what got me into this, was Apple stock. I made $22,000. It was right around $24,000 on an earnings play. I bought 1,000 shares. It was $104, and it jumped to like 126 the following morning. And I honestly thought I had robbed the bank. I mean, I was literally going over and checking the blinds. I was like, the neighbors know about this. So Apple got me into this, and I am deeply saddened by just the fact that they're losing their moat and they refuse to invest in AI. And I'm excited. I would love to get an opportunity to invest in Danny Ives' project and anything that he
Yeah.
touches, and ChatGPT, because that's where the future money is. And I will have to load the boat believing that could be the next possible Apple. It's not a tradable stock yet, so don't ask. Let's talk about, we're going to do a fire run through on some stocks here, guys. So get ready. I told you this show was going to be jam packed. Thank you, Ashley. I love every bit of your contribution. Let's talk about QBTS. We need to have Ashley on more often, I think. Ashley, QBTS, have you ever heard of it?
Yes, it's so funny how similar we are. We actually traded it today. I
Nice.
have a challenge going on, a $25,000 challenge going on in my community, and we did something called a buy right, but we auto corrected because remember I said it's okay to be a little wrong, but not a lot of wrong. So
Yes.
QTB, I meis it's a great stock, but if from a technical standpoint, it's due for a pullback. It was at the top of its Bollinger Band. It was like I think 80 on the RSI or close. It was really
Yep.
high.
Yep.
So sometimes what we'll do to kind of put a cheat code in, we'll watch it and buy it at the low of the day. Then we'll wait till it gets to the high of the day and we'll sell a call that expires in 2 days. And we'll sell that call kind of low, below our price that we purchased it at. That way we get all that wonderful premium. We did that today, but then, and it was good we did because it pulled back, But the fact that we had sold a call on it expiring Friday, we ended up having a neutral trade. I think I made $4 on it, but it ended up being to where we weren't hurt as much because when I decided to exit, we had made so much money on the sold call, meaning it wasn't going to take our shares because it dipped too low. And so that contract we sold to take our shares, it became very profitable. So we exited, but it's just an interesting stock. These are ones that actually are most profitable position. You'd be interested in this. We had purchased quite a bit. I'd say it was probably about 6 months ago. We had purchased a leaps on it, and it didn't expire until 2027, and now that has done extremely well even with this pullback today because we got it so low. But see, here's what you need to do. This is the way that you get wealthy without risking a lot of money. When you're talking about skips and leaps with these speculative companies that have promised but they haven't yet proven themselves, all you have to do, audience, is put a little bit of money behind it. Don't go load the boat on something you don't know if it's going to work, but have a little bit of exposure. So buying a leaps on a small stock like that, it's not going to kill you if it goes to zero. But if it does thrive, you could be sitting on quite the contract there. You could have locked in your position to buy that stock at $5, even if it's up to 100, but it didn't cost very much because we got in so early. So that's the way to do it. You just don't get greedy and put a lot of money behind these speculative plays, but put a little money. It is the cost to your business. It's the supplies that you're buying to bake your cakes. I mean, you have to put your neck out just a little, but you just don't overexpose yourself to a speculative company.
I think that's great feedback and very similar, Ashley, to what I said yesterday when I covered this company. I said position size is key here. Be careful because it's very, very risky. But I want to jump people into the stock so that you guys can see this real quick from my point of view. So last night I did a video and the stock price was right here. My video was out and it was $16.55. The following morning, this thing rocketed up from $16.40 all the way up to $20. The ultimate prediction for this is that the parabolic move is still intact and the end destination could be as high as this $25 or $30. That's a pretty bold statement, but I still see that as the case. What I said in that video, and this chart hasn't changed, okay? What I said in the video is that the ideal, I said this thing is very hot and it's getting ready for some type of a pause or pullback. And I said, I want to be buying it somewhere as close to 1375 as possible. I'm highlighting this now because I'm literally going to be looking to buy this tomorrow, okay? So I want everybody to understand, you were told about this right here. It went up another $4 to $5. I told you this would pull back. It's pulled back. I told you I wanted it at 14 and it's getting there. So tomorrow it looks like it might hit my buy level. Now I'm going to have the risk of holding it between 14 and 1250. Now 1250 is relevant because if we close any candles beneath 1250, and this is what you guys were told yesterday, if we close any candles beneath 1250, the parabolic move gets broken. I don't really see that at the moment, but everyone needs to be aware that that's the risk that's on the table. All right, I'm going to address one more statement. Arnold is still arguing with me in the comment section. It's okay. I'm only commenting on this not because he bothers me, but because I think it'll be helpful to everybody. He said, Josh has said for the last 20 days, the market would continue higher until the end of May with little pullbacks. Don't tell me he is calling this crash. So no, I did not call the crash. What I said is that we were going to chop higher through the month of May and possibly the first week of June. And in my opinion, that's still the state that the market is in. This early slap down and flash sale was Wall Street kind of telling us that we're probably not going to run parabolic over 600 right now. That the appetite for that level of risk doesn't seem to be present, okay? But I still believe that we're in that bullish trend. We simply have been waiting for some form of a momentum reset before the market could justify going higher and either retesting that pivot 1 or going on to pivot 2s. Nothing at all that I've said repeatedly in my videos has changed. And so the only question is whether or not I'm communicating it in a way that Arnold understands what it is that I'm trying to share. So I don't believe anything has changed. I believe that the momentum is going to get reset through this pull down. I think we've seen that the market doesn't intend to stealth sell. They intend to lock in gains at key levels. And so, in my opinion, that's not a market that's thinking that we are returning to all-time highs right now. So that's the first clue of what the market really thinks of this trend. But I'm going to tell you, and I'm sure Ashley might be able to witness to this as well, markets, they go up and down with stairs. There was no major catalyst event that's going to cause us to drop another 2% tomorrow. I believe that we are continuing to chop higher. And if we do, let's say we do drop another 2% tomorrow, then I'll definitely come out here and let you guys know that the up move is officially over and we'll begin to identify a spot to get back in. The emphasis in the last two videos was put your stop losses in, because we're getting to and I said this yesterday. Go back and watch the video if you missed it. Put your stop losses in because they're likely to trigger, because we're getting ready to get into a place where we're coming down. I did an emergency release in my Discord the other day, and I just the previous evening before that video launched, and I said, guys, Tesla, the next time I'm going to be buying this, it's probably going to be pulling back to $300. And so, yes, I think that the market's having a little bit of a step back. I am not seeing an apocalypse right now. I'm just seeing a momentum reset. Curious your point of view, Ashley. Is this the end of the up move, or do you think we'll just have a momentum reset?
You know, we have seen, gosh, hasn't it been at least a solid 2 weeks of almost going steadily up? It's been amazing to see that V-shaped recovery. It actually is healthy to have this pullback. Now, there was a catalyst that caused it, right, with the bond market dynamic and everything. But it allows traders that have been sitting on the sidelines waiting for their opportunity to get into the market. It allows them to actually get in the market, and that makes the market healthier because now you're taking with it new money that's not going to sell at the first, opportunity. They're excited to be in the markets. Whereas somebody else that got in the markets, maybe a year ago, they're like, I'm taking my profits and getting out. So you need pullbacks to get the new money to keep things running how it runs. Now, I'm of the belief, and maybe this is wrong, maybe this is right, I don't know, but I think that the reason the American market has consistently done so well for hundreds of years is because the government has levers to ensure that it keeps going up. Now, it's not that we won't have recessions or periods that we actually have pullbacks and things of that nature. It's all part of how it works. But over time, you should, if you're in quality companies or blended funds like the Qs or the SPY, you should be fine. But here's how we handle these moments, because some of you need the money that you're trading with to actually buy groceries. You would not put that money at risk, but you want to have some exposure. So in a market of high volatility and a lot of uncertainty like we have now, you don't want to be overexposed to the market, but you don't want to be underexposed either. So you have to come up with your personal trading plan and decide, how much money do I have that I can start putting my money in some of these plays to see how this goes. Just don't get that greed feeling at this point and throw everything in, and then you're in trouble if it goes against you, or worse yet, if you're using margin and then you get a margin call. So you trade differently in times of uncertainty. It's not that you get completely out. It's just you're more conservative with the position size, as you like to say, Josh.
Thank you. I want to push through and talk about UNH. I'm too ambitious. I've got too many stocks I want to get your opinion on, so we'll have to have you come back. But UNH got some interesting bad news today. Again, there was the accusation of some insurance fraud, and they came out and they refuted it and said that there had already been inquiries of thousands of their customers in that, I believe it was England marketplace, and that they had been found innocent, and that that this was old news. And I hear a lot of these stories, and I'm going to give you my honest opinion. I think it's true. I think that the stock is down. and it's getting pounded by folks that are wanting to short it. And I think, as I said to you guys, now this is a stock I gave you earlier this week, and I said that on a pullback to 300, actually 295 to 300 would be a perfect spot to get in. And I'm just going to tell you guys what it is I'm going to do. I'm going to stick to my trade plan, right? And there's nothing wrong with nibbling at it when it was up at 308 because there was no guarantee that it wasn't just going to continue to climb. But I told you that
Right.
the real entry position of any size that I was going to take was for a dip beneath 300. I think 300 is a psychological level. I'm betting that tomorrow we're going to probably open up or test that level. And I believe that this was the exact trade plan that I gave you. And this is what happens. Some folks who are they're kind of listening, and I'm not going to dwell a lot on this, but they're kind of not really listening to the technicals so specifically. They get in at the wrong time, they panic, they get out. I'm going to work my trade plan. UNH is doing exactly what I want it to do. It's pulling back. I'm going to take my my largest position to date, which isn't huge because this is still a new position for me. I'm going to take that tomorrow if we come beneath $300. I haven't looked at the chart, so it may even be there now. But I'm excited about UNH, but that's why we're not doing skips, which are now maybe Ashley might recommend skips, but my thing has been leaps. Ashley, what are your thoughts on UNH? Would you do skips and leaps on this right now?
Well, I actually had a video that I did in a trade in my community. It's kind of cool. We actually did buy leaps because this stock it's going to work through its issues over the next few months. And so if you have a leaps, it's a little bit, more protected than a skips would be. But we this is so cool. We sold puts to finance the leaps. And so it's just a great way to trade because you get the premium right in your account right away, and you use that to buy a longer term instrument like a leap. So I am of the belief that it is such a large insurer in this country. I think like when the car companies all got in trouble and the government stepped in, I think that this is in so many retirees accounts. It's a safe stock from, when you look at, you turn your money over to someone like an Edward Jones, I mean, they put you in this stock. So I know that is weighing heavy. It's got to weigh heavy on the administration. I imagine if something gets too awful, that they'll step in for some kind of support or something. But we do have a new CEO, and there is a lot of confidence in him. Once he can start rolling out his plans, he just started. So we got to give him a chance to refute some of this stuff, or at least answer to what the answer is as to it won't continue to happen, and bring new breath, new life, new talent into that company. But eventually these things will get worked out, and we'll be happy that we jumped in at this point. I can already hear it now. I can already hear it now. Here, let's say a year down the road, this thing's back at 500, 600. I wished I would have gotten more, is going to be the comment. So ironically, there's less risk getting this particular stock now than if you wait till it's back up at 500.
Yeah, let me show everybody the chart real quick just so that we can get perspective. So it's hitting the level that I wanted to get in. So 295 to 300. We've cut right into it today. This would be a good time for me to buy some shares, but let's just go and look at the longer time frame. It is so rare that you get these types of downturns. Let's pull up oversold down here. So we are not there yet, but we're getting pretty darn close on a monthly. And you can see through the history, this only one time before got oversold in a very similar environment, technically, right? Well beneath the moving average. It got oversold. And then what happened? Let's minimize the MACD. This thing went on a tear for years, years and years and years and years. It went from $21 to $623 when it got oversold on the monthly. Now, there's no guarantee that we will actually get oversold, but we're pretty darn close to it. And, we're in a similar spot where we're well beneath the moving average. And I'm okay. I'm okay with buying this range, but I'm having a long-term view because this will probably correct, and it'll likely go on a long-term rise. But I like the play. That's why I brought it to everybody. And if you got into this thinking you would have immediate profits, One, you didn't remember that this is good under $300. All right. Someone else wanted me to mention that part of the reason Target, and I don't know these, I'm going to pick the right comment to post, but basically they're talking about the rollback of DEI. This company's gotten boycotted by both sides of the United States. People that didn't like some of the advertising that they were doing and some of the products they were offering a couple years ago. It was getting half of the United States or more upset. And then they've turned around and gone the other direction. And now they got the other half of the United States upset with them. Now, I'm not going to touch the debate surrounding that. I'm just going to say this, that really all American companies should stay out of social issues as best they can and focus on offering a good product and running their company well. But again, these are the types of reasons that the stock is beat down, and you don't get a top American brand like this, Target, you don't get it oversold on the weekly chart and possibly the monthly chart when they're doing everything right. This is setting up for an opportunity for long-term investors. Now, some of these other companies I'm mentioning pay great dividends. And can you imagine getting into UNH, a good dividend paying company at these levels, and it going on to get back up to $600? And you can just hold that and continue to pick some up over time. To me, I'm excited about that. All right, let me quickly cover. I'm going to go through these names, and we're going to do a lightning round. I'm not going to delve into the subjects behind them. I'm going to ask her opinion, Mrs. Ashley's opinion. PepsiCo. What are your thoughts on PepsiCo right now?
I think it's at a good level to consider, but I don't know. It doesn't. I don't stay awake at night thinking about trades with PepsiCo.
All right. Humana. This is another one in the healthcare industry that's beat down. What are your thoughts on Humana right now?
I think it's worth a nibble. I wouldn't put significant money behind it. Healthcare is so, it's so dependent upon what's going on. There's so many factors that can affect it. So healthcare is something that is just from a options selling standpoint. I don't mind a little exposure, but I don't want a lot of exposure.
All right. What's your thoughts on Estee Lauder? You like the goods, but not the stock?
I don't know. I kind of think it's in that dinosaur category. I think, it was Mary Kay and Estee Lauder when my mom would take me to the counter at the department stores to get makeup. I don't know that they're innovating enough. I don't know. I don't.
Is there an AI
Oh, what?
solution to Estee Lauder? All right, I'm going to
Yes,
keep.
there is. It's the filters on our videos.
I got you. Don't even worry about makeup. We're all going to walk around with a filter that gets projected from our hairline, I imagine. All right, let's keep going. Fang, Diamond Energy. Diamond, of course, oil's been significantly. There is a oil war, an economic war going on between Saudi Arabia, Russia, and Venezuela and other countries. Basically, they had been warned. The OPEC had warned their members to slow down production, and these countries didn't. And so Saudi Arabia has decided to ramp up all production because we know they've got the most in the world. And so they've decided to flood the market to utterly annihilate and punish competing countries for not doing what they told them to do, which was to decrease their supply. And so now they've decided to just go all in and crush them, because a lot of these countries, they're living paycheck to paycheck, supplying oil to the world. Their entire economy is built off of the profits that come in through oil. Russia is a great example of that. They're not diversified, and so they need that money to keep that war going and everything else they're doing. And so I think that Donald Trump and his new relationship with Saudi Arabia's worked out a deal to say it's time to put the leverage on them. It's time to tighten the vice on Russia so that they come to the table. And the way to do that is economically. And the way to do that was for Saudi Arabia to flood the market with oil so that Russia couldn't sell any. Basically, they're going to undercut everybody, and then they're going to go broke, right? And so they also were told to watch their production levels. They didn't. So there was something in it for everybody. Now, because of that, and I think I see it as a mid-summer or maybe the end of June, the worst of this might be over. So I do think that energy is going to continue. It's still in this downdraft, but I'm giving you guys a real quick case as to why I believe there's going to be an incredible turnaround story. And one of the ones I like down the road that I might even begin to nibble on, because you have to remember, Wall Street front runs these stories. They front run the story, and when they think they're near the end, they start buying up, accumulating. And so I like FANG. What are your thoughts on FANG, Ashley?
Hi, I heard most of what you were saying, but I don't know if it's just me or were you freezing up, but I could barely hear what you were saying.
You know what? So curious of your
Can you
take
hear
on
me or are we
energy.
frozen?
What's your take on energy right now? Yeah, you are.
Energy. Oh, okay, energy.
Go
Yes.
ahead.
We actually do trade energy. I'm a, let me do this.
Nope. We're having technical difficulties. It was better when you had your earpieces in. Sorry, guys, about this.
Okay.
Yeah, you had been frozen up, but you're good now. How's it going, Ashley? Can you hear me okay? All right, we're getting some feedback from I think we're getting some feedback. Yeah, I think we'd stick with the earphones. They were working. How about now?
Okay, I think I can hear you fine now. I'm sorry. Apologize for that.
No problem. What's your thoughts on FANG or energy in general?
Okay, and I love a diversified portfolio. So I think I'm very heavy in the tech stock. So I love having some exposure to energy for sure. And I like to actually, do it in blended funds. So that's something where you don't have to, cherry pick one company. I like having blended funds with exposure to energy. And if you're going to go with healthcare, instead of the individual companies so much, do the blended ETFs. That's what they're great for. You have to deal with management fees, but still you get exposure to that sector.
I agree. All right, I'm going to leave it there, guys. I actually have a couple more picks, but I'm going to wait until I can bring Ashley back on the show. Again, we're going to be dropping a link here, so pay close attention to it. It's going to be a boot camp on her skips strategy with a breakdown of how I'm employing technicals to enter or exit and to catch reversals. Thank you, Ashley, for joining me. I appreciate it, guys. Make sure you go over to her page and hit subscribe. And I'm going to be over on the Stock Squad, and we're going to dive deeper, and I'm going to share some more picks. I have an unusual penny stock in the energy sector. I normally wouldn't touch this, but I know that you guys, some of you, love it. This isn't for your long-term investors. It's a crazy, crazy lotto pick. It's $1.32 today, but it could be something that could turn around. It had fallen from $40, and so I'm going to throw it on your radar over on the Stock Squad Live, and we're going to be talking more about these contrarian plays in the coming days. Thank you, Ashley, for joining me. What's your final word on the market here and on this upcoming event?
Upcoming event, super excited about it because it gives me an opportunity to work with somebody I really respect. And I'm excited to learn alongside everybody else on what you're going to teach. And then I'm super excited to teach. I'm just a teacher at heart. And so the thought that I can actually help people better understand how to trade the way that we trade and do it safely is super exciting. But on the market in general, hey, I just think we need to hang in there, but we don't need to overexpose ourselves. We do need to have risk management in place so that we can sleep at night and we can learn it. If you are not comfortable jumping in this market right now, it's okay, but you probably want to at least consider paper trading it because you can learn a lot on a variety of ways to trade in a market like this right now. It's giving you all sorts of setups. So take advantage of it from a learning perspective with paper trading.
On that note, we've got a couple guys that show up to the live trade sessions who started with $600, under $1,000. And I've got guys in there that have been paper trading. One guy came in and he said, I've made $11, following the trade, And I really respect those guys because I love that they're setting time aside and they're showing up to learn. They're not even expecting to somehow get rich. I think people that come in and you see them comment, "Oh, I lost all this money." They don't have a trade plan. Their position size is out of control. They're not using a stop loss. I have been given these principles over and over again, and I imagine Ashley's got hers. Trade the trend is number one. We've got to understand what the trend is. And up until today, the trend has been cautiously bullish. Then you have to use a stop loss because the trend, as we learned today, can change. It can turn on a dime. And then when you have a more risky trade, something like some of these contrarian trades or maybe the QBT you have to control your position size. It's really an alternative to using a stop loss. You can have a wider stop loss, and in some cases, you might even not have a stop loss at all if your position size is very low, right? You can have a wider stop loss. And then it's the dynamic of over trading or not trading too much. It's greed. You've got to put that emotion in check because we're being bounced between fear and greed. And if you do well and you make some money in the morning, you want to lock it in and walk away, reset your mind, reset your emotions, and show up the following day. I tell you for a fact that I learned how to trade much quicker than I learned those disciplines I just gave you. Those took years, and I'm still trying to honor them each and every day and journal when I don't. Thank you, Ashley, for joining me. I look forward to our next show. Will you be back on as a guest? I'd love to pick your brain about some long-term trades again in the future.
Absolutely. It's an honor to be on your show. I would love to come back and help anybody I can. I love
And
the dialogue.
And guys, we'll have details on this upcoming boot camp. I've never done one before, so I'm going to be pouring everything I've got into it so you guys can have great value. And Ashley's going to be bringing some very valuable information on the skip strategy that she herself has coined. Thank you guys for joining me today. Peace and blessings. Thank you, Ashley. Take care.